What if I told you that your signature is more powerful than you think, and every time you sign a loan, you're creating money, not borrowing it? In this video, I'm going to break down how your signature becomes a financial instrument, how banks profit from it, and why understanding this flips the entire credit system upside down. Now, even though I've studied UCC law, banking regulations, and commercial code, and I'm here to expose the real power you've always had, but you was never taught to use, this is not legal advice, okay? This is not financial advice. Do whatever you will with this information. I'm putting this out there for educational purposes only, and anybody can look this stuff up. I get a lot of questions of people asking, can I do this? Can I do that? Or there's some type of fear behind any of the concepts that I talk about. But this should be one of the last videos that you see that will empower you to start taking action, or empower you to read it yourself. So make sure you got a notebook. Make sure you got a notepad. Make sure you have a pen, a piece of paper, loose leaf, whatever the case may be, and write down whatever thing sticks out to you when you watch this video, and go research it on your own, okay? Because I'm not doing this for the heck of it, because these conversations that I talk about is really to get you to think outside the box, think outside the matrix. You dig me? And this is just one of the philosophies that's going to make you think differently. Once you hear this information, and if you get all the way to the end of the video, which I suggest, your whole mindset will be shifted, okay? Now, I've done this video before, okay, where I talk about your signature creating the credit, okay? And my angle is going to be a little bit different in this video, okay? For all my new people who don't know this, we got some new followers, new subscribers. This video is to really put you on to your hidden power. People say, well, you know, how is this credit being created, or how can we do this? And I'm about to be breaking this down right now, okay? So if you're brand new, remember to like the video. If you're old, like the video. You dig me? I love you either way. Share this out with 3 of your friends, because the whole goal is to push this information out there so that more people will do it. If more people are doing it, then the corruption will be broken down, okay? I don't really care to be, you know, this is not a conspiracy type video. Everything that I'm going to be talking about is all factual. You dig me? Based off of real concepts, real laws that anybody can look up. So make sure you stay all the way to the end. Okay, so in this video, we're going to be talking about the hidden power of your signature. We're going to be talking about how your banks turn your signature into cash, and we're going to be talking about the legal framework that proves it. Okay, so if you want that, make sure you stay all the way to the end. Okay, also, if you're brand new, hit the subscribe button. You dig me? Road to 50,000 subscribers. All right, now let's talk about the hidden power of your signature. First things first. You are taught that signing a loan equals borrowing money, but the reality is your signed promissory note is an asset to the bank, and the bank uses your signature to create new money on their books. Your signature equals financial value, and they won't tell you this, and you don't borrow existing money, you actually create new credit, okay? The pen creates profit, not the loan officer. So if you need to run back that statement, go ahead and rewatch it. But that's the truth, okay? And this is not based off of belief. This is all things that I'm about to break down, the legal framework that proves it. But before I do that, understand that you are signing a contract, yes, because they'll say you agreed to pay back X, Y, and Z. But what if I told you that that contract was actually a financial instrument to the bank? What if I told you that your signature is what monetized that contract, or made that contract monetizable? I don't know if you ever heard of a bank. I don't know if you ever heard this, but banks can only participate in commerce if you are signing loans, if they're giving out loans, okay? So they cannot make money without you signing for a loan, and they just call it a loan. That's what the system wants you to think, that someone is loaning you money, but that's not the reality. You're actually signing a promise to pay note. For those who don't know, a promise to pay note is a negotiable instrument. A negotiable instrument is an unconditional offer of money we're going to talk about in a second. You dig me? So your signature is more powerful than you think. And not that you could just write on a piece of paper your signature and then you're going to get money, but it's the promising to pay something and then signing it becomes a negotiable instrument. It becomes a financial value to the bank because they can then take this and create deposits. Okay? They can then take this and go to the Federal Reserve. Okay? We'll talk about fractional banking. We'll talk about negotiable. We're going to talk about all that. We're going to get into all of that. Okay? So the simple concept that I just said, that your signature, or when you sign a loan, is not you borrowing money. You're actually signing a bond that they use for exchange or use as a financial asset. Okay, that's the one hidden power about your signature as it pertains to loans. Okay. And this is one of the most important disclosures that they must disclose to you. And this is why all contracts are fraud as it pertains to consumer credit transactions if they don't provide this information. Now, here's how your banks turn your signature into cash. You sign that promissory note, which is your promise to pay. Okay. The bank deposits that note as an asset. The bank creates a matching liability, the loan. No prior cash is lent. The loan is created from your signature. Your payments plus interest come after they already profited. Your promise created the product and then you paid for it again. So imagine if you were the creator of something, and because you created it, or can you imagine paying for something that you created? Really think about that for a second. Imagine if you created a piece of art and then now maybe you created that piece of art and you exchanged it for something, right? But then you created a piece of art, you exchanged it with somebody, they paid you for it, and they're calling that a loan. They paid you for the value, your art. Let's say it's a $100,000 piece of art. And then they said, you know what? I want you to pay me back on that $100,000 that I paid you for. You know what I mean? For the piece of art. May sound a little bit crazy. Hopefully when I chop up this video, I'll make it sound a little bit faster. But long story short. But then let's just put it in the aspect that you gave somebody a art painting, and instead of them actually giving you cash in hand, they just typed in a book entry into your bank account. They didn't actually give you any cash. They didn't actually lend you any. They didn't actually give you anything. Okay? You created that value yourself because of the value of the painting. Okay, so, and then they charge you interest on something that you already paid for, something you already created. Okay, I don't want to confuse y'all too much, but when you actually sign a promise to pay, you have created a negotiable instrument. Okay, so they're not going to give you money until they make profit. So with that being said, a lot of times they'll make you think that they loaned you something, but they never did. Moving on. So now we're about to dive into the legal framework that actually proves it, okay? First things first, what I want to talk about is modern money mechanics, okay? Modern money mechanics, you can easily look up this online. It's completely free, okay? For those of you guys that don't know what modern money mechanics is, it was made by the Federal Reserve Bank of Chicago. So it's made by the banks of all banks that explains what money is and how it is created. The mechanics behind modern money. Okay, so first things first, understand that in this book it says that banks do not lend money. They create it based on borrowers' promise to pay. So let's just go straight to it'll break down what money is. It'll break down many different things. I mean, it's very self-explanatory. But the part that I'm just gonna go ahead and fast forward to is that under who creates money, it breaks down how money is created and the actual process of the creation of money. But I'm just going to stroll all the way down to the aspect that they said that bankers discovered that they could make loans merely by giving their promises to pay or banknotes to borrowers. In this way, banks began to create money, okay? So just on a simple aspect of giving their promises to pay or banknotes to borrowers, they were able to create money. So when you think about it, the aspect of promising to pay is also creating money. You dig me? So if you gave a bank a promise to pay note, that is equally the same as them promising to pay you as well. You dig me? When you go back to how it started with goldsmiths, and typically people would exchange their gold or their coins for a bank note. And then they would then transfer those bank notes to whoever they wanted to purchase from. You dig me? So when it got to a point to where they was like, okay, bet we want to, we're gonna start, instead of us actually giving people the gold, we're gonna just promise to give it to them. If we promise to give it to them, then we can create some type of system or credit system to where now people can start just exchanging our promises. Okay? And in this book, I mean, this is, many pages of information about modern money. I suggest anybody to come here and read a little bit more about this. Even if you guys come here and come straight to the aspect of who creates money and you read this to its totality, it will start making sense. Okay? Now, it says that through today, transaction deposits are the modern counterparts of bank notes. Okay? It was a small step from printing notes to making book entries crediting deposits of borrowers, which the borrowers could spend by writing checks, thereby printing their own money. I hope you guys are gathering this. So, I mean, if you want me to affirm this, deposits in law. Give me 1 second. When you look at the definition of deposit under 12 CFR 204.2, under the definition section, it says deposit means the unpaid balance of money or its equivalent received. Okay? So, long story short, it says that a deposit is an unpaid balance. Okay? So people may think that a deposit is actual money, but it can also be something that is unpaid. So if they deposit 100 grand in your account, they just are notating that there's an unpaid balance of 100 grand. It doesn't mean that you actually have 100 grand. That means that you are owed 100 grand. Okay? Someone said, well, I didn't interpret the law like this. Well, okay. Keep being asleep. But it's saying it right here. How can you misinterpret an unpaid balance of money? There's many people who will read this and say, well, that's not how I read it. Do you know the definition of unpaid? Something they're going to say you are. Oh, you haven't paid this. Okay, you haven't either, my baby. So, for those of you guys who want to check to see if these concepts are true, if you promise to pay something and put your signature on it, you have now created a value, okay? So then we go to the aspect of what a negotiable instrument is. A negotiable instrument is or means an unconditional promise or order to pay a fixed amount of money. So in the premise of you creating that promissory note, okay, a unconditional promise or order to pay a fixed amount of money. If you tell somebody, hey, I promise to pay $1,000 back in, $100 installments, that is a promissory note. That is a negotiable instrument, at least to the bank. This is enough for the bank to be able to create a currency or to create credit for you. No, they do not actually get the money from they don't actually get money from their reserves and give it to you. They just create it after you give them your promise, because they give you their promise to pay. As a matter of fact, it's nothing for them to type in an unpaid balance. It's literally nothing for them to do that. It takes no risk, okay? So, given the fact that they create credit based on our promise to pay, if you sign a promise to pay note, you just created credit for yourself. So you got to ask yourself, why are you paying for an unpaid balance? Moving on. Let's go to UCC. Well, we're still on UCC 3-104, negotiable instrument. If you have a negotiable instrument, this is something that is a value to them. Okay? Your signed promise qualifies it as a negotiable instrument. So someone's going to ask you, okay, well, am I putting this coupon together? Yes. Even if you just wrote a letter and you said that this is your performance, or you said that and you made an unconditional promise to pay, technically that is of value to the bank. So even if you don't, obviously I would expect you to come to 328.6. I would expect you to come to 31 CFR 328.5 and understand how to put together a coupon. Okay, I would expect you to come here and read both of these sections before you put a coupon together. Instead of asking, okay, bet, did I do it the right way? According to this, did you? You get what I'm saying? And if you did, and you follow the steps properly, and you connected with a tender of payment, and you give your unconditional promise to pay something, then you just created your own negotiable instrument. Even when you go back to the definition of negotiable instrument, it says that if an instrument falls within the definition of both note and draft, a person entitled to enforce the instrument may treat it as either. Okay? It talks about a cashier's check. It talks about a check. Okay? Even money order. Some people do the money order method. I mean, if you put your money order together like a negotiable instrument or create a certificate of deposit, okay, the bank can treat it as a negotiable instrument. Okay? I forgot what point I was trying to get there, but moving on. That's UCC 3-104. Okay? Gives you the definition of negotiable instruments. Now, another thing I want to talk about, because we always talk about consideration. We talk about value. And to understand UCC 3-303, value consideration, it says an instrument is issued or transferred for the value if the instrument is issued or transferred for a promise of performance to the extent of the promise has been performed. Okay? The transferee acquires security interest or other lien in the instrument other than the lien obtained by a judicial proceeding. The instrument is issued or transferred as a payment of or security for a antecedent claim against a person, whether or not the claim is due. The instrument is issued or transferred in exchange for a negotiable instrument. The instrument is issued or transferred in exchange for the incurring of an irrevocable obligation to a third party by the person taking the instrument. Consideration means any consideration sufficient to support a simple contract. Okay? It even says that the drawer or maker of a instrument has defense if the instrument issued without consideration. Okay? I can read this whole thing. I'm not about to read this whole thing. I get into it just reading it. But value is given when the instrument is issued. So just to break this down a little bit further, okay? Essentially, in normal language, UCC 3-305 explains what counts as value. When someone issues or takes a negotiable instrument like a promissory note, a loan agreement, or a paper promise to pay, it says that for someone to legally claim that you owe them under the contract, they must have given something of real value in return. Okay? So, here are the key things that are broken down as far as UCC 3-303. Okay? You can only enforce a negotiable instrument if there was real value exchanged. If no real money, goods, or services were given, then the loan may not be enforceable. What counts as value? Giving money for the note, delivering goods or services for the note, or giving up a right like canceling a debt in exchange for the note. Okay? So once you cancel a debt, it loses its value. Okay? Or as a matter of fact, once you cancel the debt, that's where your value came from, and you cannot enforce a negotiable instrument without the consideration. Okay? Just handing you a piece of paper or making an entry in a computer isn't necessarily real value. If the bank didn't loan existing money they already had, but instead created credit based on your signature, they didn't truly give value under UCC 3-303. Without real value given, you may have a defense against enforcement. So, meaning you can challenge a loan or demand proof that the lender actually put something at risk. Okay, so here's a real world example. If I loan you 10,000 cash that I had in my safe, that is real value. But let's just say if I loaned you 10,000, if I say I'll loan you $10,000, but instead I just type $10,000 into a computer system after you signed a note without risking any of my money, I may not have given lawful consideration. So here's why this matters as it pertains to debt discharge. If the bank never risks real money, you can argue the loan's lack of lawful consideration under UCC 3-303. And if there's no real value, the contract may be voidable, meaning it could be challenged, rescinded, or discharged. Debt collectors especially often cannot prove that real value was exchanged, giving you another tool to dispute the claim. So, if no real money, goods, or real sacrifice was given, then the lender automatically can't enforce your promise to pay, because it may not have been a lawful transaction in the first place. Okay? So, all of that, someone may read this and say, okay, well, I didn't get all of that from here. Okay? But As long as you understand the definition of consideration, as long as you understand what value and consideration is, you can challenge a company on whether or not they have given real value, or if this contract has real consideration. And long story short, if it's not real money, just to put it in layman's terms, it's not real money, then there is no value and consideration. If you agreed to pay back real money and they don't give that to you, then there's no consideration. There was no value exchanged to you. Okay? So then we talk about C12-C411, issuance to reserve banks, nature of obligation and redemption. This goes hand in hand with modern money mechanics. But it says that only lawful money extinguishes debt, but banks transact in promises. Okay? So you didn't receive money. You created an instrument that they sold. Okay? You literally created the picture and they sold it. You thought you was exchanging that picture for money, but you never did. You never got the money that you exchanged the picture for. If someone tells you they're going to give you money based on a specific contract and they don't actually give you money, they make you think they gave you money, then they didn't perform on their contract. Okay? So if you agree and you say, hey, look, man, I'll pay back the 10 grand, but they never gave you 10 grand, what would I be paying back? Okay? So here's why they never teach this. If you knew your signature was an asset, this is what you'll probably do. You'll probably demand better terms. Okay? You challenge their predatory lending, and you'd question who really owes what, like I'm doing right now. And keeping people ignorant equals protecting the bank's profits. See, the whole point is they want to protect their profits. They don't teach you finance. They teach you how to be obedient. And someone says, okay, well, slavery wasn't a choice. Yes, obviously to some people. But when I use the Harriet Tubman and the railroad situation, yes, it was a choice for her. Yeah, they can come and get her. But if you try to fight it every single time, yes, you're going to have to kill me. And I'm not saying it's as easy to do that. It's not easy to just like get out the system, but that's the whole point. Imagine how powerful you are if you try. I'd rather die trying. You get what I'm saying? Because for some people, death is freedom. You dig me? So here's how to use this knowledge. Everything I'll talk about today, one person will say, okay, bet, well, yes, he's talking all of this, but I mean, what's the whole point? Okay? Here's how to use this knowledge. Number one, you want to challenge the validity of the loan contract. You want to demand proof of funding. You want to demand whether or not there is real consideration. You say, well, how do you do that? Through a conditional acceptance. Hey, I'll conditionally accept X, Y, and Z. I will agree to your contract if you can show real consideration. If you can prove X, Y, and Z, then I will pay X, Y, and Z. But if you can't prove it, then there was no value and there was no real consideration. You want to issue an affidavit of truth, explaining the lack of lawful lending, saying that, hey, this is what I know to be true, that there was no lawful lending. You just deposited something in my account, which is an unpaid balance. If there's an unpaid balance, then what am I paying you back for? You are fraudulently trying to get money out of me that you never gave me. And if you write these things in an affidavit of truth, this is something to be your truth, and it goes unrebutted, then it stands in truth in the law. Then we dive into, you want to demand the full accounting of that loan under UCC 9-210. UCC 9-210 gives you the ability to ask for an account statement, ask for any type of documentary evidence as it pertains to the accounting. So one of the things that should be included in there is how the money was funded, okay? And when you know your role in the transaction, you're able to take control. Your signature is your currency. Start treating it like it. So first things first. I mean, if you're going to sign something, you're going to make sure you are getting your full bang for your buck. You want to also know and understand what you are signing, okay? And you want to know what you're signing essentially gives you the ability to do. There are going to be people here that say, well, why do the banks push back so much? Just like I told you. They want you to constantly be in this state of obedience instead of actual truth. What is obedience? I mean, you just following what somebody tells you to do. But I have a lot of free thinkers that watch my channel. So I want you to tap into that free thinking and actually take your control back. Okay? You lose your rights once you ask someone for permission. Okay? So You're not, understand that at the end of this video, you're not just signing a contract, you are actually creating value. Your signature funds the system and your ignorance fuels the trap. Once you understand this, you'll never sign the same way again. Don't be ignorant. Do the due diligence. Watch the video multiple times. You dig me? Go get Modern Money Mechanics. It's for free online, or actually get the actual book. You know what I mean? Also, on top of that, everything that I talked about today, make sure you wrote some notes down. Make sure you go look this stuff up yourself, because this is education. It's an open book test, literally. And if you fail the open book test is literally, whose fault is that? Is it the teacher's fault, or is it just you don't know how to read? It's just that simple. If you know how to read, then this is a very easy test, okay? Not only could you just read some of the laws that I talk about, go research the definitions of each word in the law. Okay, what is value? What is consideration? What does this actually mean? And a simple Google type on Google will break it down to you. But we don't want to use Google. Oh, Google's not always right. Okay. If you know how to research, then you know what exactly to look for. You know exactly what sources to go to. I mean, if I'm on cornelllaw.com, this is a law.cornell.edu, a law institute, and they have the Constitution on there, then yes, this is a credible source, okay? So here's the thing. They got to put the information out there, but they don't got to tell you how to use it. They don't got to tell you that it's applicable, but they have to put it out there. That's the law of the land. That's common law right there. That's supreme law. Supreme law is that the fact that you do have unalienable rights, but unless you contract to something or agree to not read it, or not, you have ignorance, the law doesn't protect ignorance. Somebody will say, well, I didn't know that this is what this meant. Well, nobody's here to listen to your excuses or you being a victim. Nobody's here for that. They just want the facts, and they want you to prove whatever it is your stance is. Okay, bet. If you didn't know something, what is your basis or challenge on that? Okay, well, I'm challenging that they didn't disclose all the details to me. Now, that's an actual challenge. That's an actual violation. Okay, I put together this coupon. If you watch my videos, it doesn't even matter how you put together a negotiable instrument anymore. It's about the initial challenge and challenging whether that company has a real consideration. Yes, I can use my tender of payment. I can use my negotiable instruments. I can create my own promise to pay, but I already know you're going to refuse it. So what is my next thing? I have to know how to communicate when they refuse it, or I have to know how to communicate and get them to start proving things to me. That's through conditional acceptance. That's through creating my own financial instrument. That's understanding the law so I can be able to communicate my stance and know exactly my power is in the system. It's not about putting together a coupon. It's not about filling out a 1099-C the proper way. It's not about creating the best promissory note. You can literally write on a piece of paper, hey, I promise to pay X, Y, and Z with your signature. And that is something they can also use as a financial asset. They're not going to tell you, okay? Because paying with your money is just a matrix. It's just the level of control. They just want to know that they have control over you. So it's not about them actually getting paid. You get what I'm saying? Your signature was enough. Your signature is more valuable than a dollar bill, believe it or not. Because they're able to get paid multiple times off of your signature versus that dollar bill that they only get paid one time. Once you contract to something, that is where the power lies, not only for you, but also not only for them, but also for you. You have defenses once you contract to something under contract law to challenge whether the contract is valid. And that's the whole point. That is the whole aspect. It's beyond coupon remittance. It's really beyond all of that at this point. Okay? It's bigger than that. It's communication with the debt collector. It's shifting the burden of proof. So if you got all the way to the end, thank you guys. Comment the word discharge. Number 2, if you want to learn about this, you want the resources and templates down below, I have the Complete That Guide. Okay, the Complete That Guide literally breaks down everything that I'm talking about. It has concepts, old concepts, new concepts. If you mix the old concepts with the new concepts and the new material on my YouTube, then you'll be able to have a full understanding. It's also something that you can refer to other people and make a commission as well. Okay, this is an educational course program with resources. This is not something that you're going to get and immediately start discharging debt. It still requires you to educate yourself, okay, knowing that fact. And number 2, if you want to work with me one-on-one, I have a private mentorship that you can go ahead and tap in and apply for. Speak with me or my team. Okay? Now, this is specifically for people who are serious about their financial situation and want to change their life. Okay? Not just, oh, I just want to discharge my debt because I'm tired of paying debt. That's not for you. Okay? Because it's just like the example of someone saying, hey, well, I want $1 million. If I had $1 million, I would stop working. No. It's still going to need some work for you to do. Okay? So you got to have reasons. That's why we don't just accept everybody in my one-on-one mentorship. Number 3, follow me on Instagram at biz.nick. We talk about credit. We talk about financial literacy. We talk about motivation. And we talk about the truth. That's the whole aspect of my content, to bring truth to the people. Okay? My last question is, have you ever felt like the paperwork benefited them more than you? Drop your thoughts down below. If you ever felt that way, it's time to take action. Remember to like, subscribe, turn on the post notifications so that you get an update every time I post a video. Follow me on Instagram so you can get the updates for those, because your signature has always been powerful, just forgotten. I love you guys. Thank you guys once again, and I'll see you in the next one.